The magnificent seven horsemen descend from the heavens. Is volatility rising? That and more on Robschild. Hi everybody, it's Thursday, November 6th, 2025. Our episode starts with our first headline: The magnificent seven horsemen descend from the heavens. You can see exactly what I'm talking about looking at the heat map today. Seeing a lot of red from the Magnificent Seven. Microsoft down 2%, Nvidia down almost 4%, Amazon down almost 3%, Meta down almost 3%, Tesla down 3.5%. And a lot more red generally in the technology sector and some in the consumer cyclical sector. A lot of money is packed into these companies, and their prices assume just an amazing path of earnings growth that will never end. That's why I said descending from heaven. They're really high, and most of them fell a lot today. SPX, the S&P 500, dropped by 1.12%, and with a confirmation in the advanced decline line going down. So this was a broad-based sell-off, not just the Mag 7. The Nasdaq fell 1.9%. Also, popular growthy ETFs of Cathie Wood ARK K dropped almost 5% today. ARK Q down 4.4%. ARK F down 5% today. Part of the descent was in the headlines today. A Challenger report. Challenger Gray and Christmas is a private company, and corporations basically pay them to lay people off, so they know what's going on in the jobs market for layoffs. And this report came out today, shocking a lot of people, saying that jobs cut, the main headline is right here in their own report on their own website: job cuts surpass 1 million, highest October total since 2003. Companies cite cost-cutting AI in October. Go home, everybody. We have robots that are taking your place. To see what it looks like on a graph, layoffs for any October, highest since 2003. This chart goes all the way back to the mid-90s. And this green bar right here is the 2025 number, each bar representing a year. And yeah, we haven't seen this since 2003. And then, well, it was similar bars in 2001 and 2002. So is this a one-off, or are we going to see a multi-year trend of higher October layoffs? You'd need to have a crystal ball to be able to predict that one. Second headline today: Is volatility rising? Yes, the VIX rose today. I noted yesterday how the VIX, the pricing of options contracts, the Wall Street's gauge of, major fear gauge, how expensive is it to gamble on larger moves in the market, basically. I said yesterday the VIX, it was looking like a blow-off top. It had looked like one of those peaks where we just go straight back down. After all, all three of these candles in this pattern here are all red. They sold off during the day. And today's we have a green, so we're at least fighting in this zone after running up. So maybe volatility is here to stay. Maybe it will go higher. The VVIX, the volatility of volatility, did enter and close into what I call rising uncertainty zone above 105. Below 105 is, safety zone. The VIX, is not necessarily going to spike from here, but this is starting to get a little bit more cautious today. Add to that, the Fear and Greed Index by CNN Business is still in extreme fear. So it wasn't a one day yesterday where we entered extreme fear and then rebounded out of it. Nope, we are still in it. And markets are preparing for it to go lower right now. That's the way I see it. There are more charts to go over momentarily before we get our community topics. What moves, if any, did you make today? Robschild buys a little bit of volatility, calls on VXX. Dipping my toe in the volatility water. After all, when the federal government does open up and we get those other job numbers coming out in addition to this layoff report, if that adds fuel to the fire, things can escalate very quickly. And that's starting to become a little more clear in my crystal ball that we may not end up getting that typical November, December seasonal bull market that we usually get. So coming up, economic data is still in limbo until the federal government decides to reopen. I know the SNAP thing, it looks like they're being forced to pay the SNAP benefits again. So the federal government actually has pressure taken off of them from that, but it looks like the pressure is still on from airlines having to cut flights. Not a good year to schedule flying plans. And so, but because so many people typically do plan to fly on Thanksgiving, there's a lot of people that want to travel for Thanksgiving. That could be our next catalyst that gets puts the fire behind them. Anyway, yeah, initial continued jobless claims weekly every Thursday. We didn't get it again today. This is several weeks in a row. Now, tomorrow, we are supposed to get our next unemployment report. We are now 2 reports behind on this after tomorrow, which imagine the first one's really bad and the second one's even worse. I mean, if this challenger data has or gives us a clue as to what's going on, it could be way worse than anybody else is expecting, but I guess we'll see. Don't forget about those tariff updates. Thank you for watching, liking, subscribing, commenting, and supporting Robschild. No changes to the bull ratings. And see my website, link in the description to read through my daily reminders, macro views, portfolio explained, and stock research center. Onto the charts, starting with SPX, the S&P 500. I just said yesterday, hey, maybe this is getting bullish here. After all, we're holding this line here. When this first major sell-off, it was acting like a big, engulfing candle with all these inside bars. It was looking very bearish until we broke above it. And then these 2 past trading days were acting as support. And today, nope, no more. We're cracked back down below it. This chart on its own, I can't say is very bullish or bearish looking. I'd call it neutral myself. But let's remember how dumb and bad Mr. Market is. How much dumb money is piled into these insanely overvalued stocks. And with them basically panicking today, my crystal ball shows this is likely to continue. Also interesting, the services data came out yesterday looking all strong, along with, ADP jobs numbers. It made us think that, growth, there's more growth. The economy is fine. That's why the 10-year Treasury note yield right here rose yesterday. We talked about it yesterday. It rose 8%. And then today we gave that basically all up today, going down 7%. 7 basis points, sorry. We also talked about this red line here. This is a major, major, major psychological line starting in August of 2022, connecting this absolute mega middle point here, September of 2024, connecting to the April low right there, exactly to a T, by the way. We've been above that. We cracked below it. We've been fighting at it, and then that's what happened. Yesterday, we ran up into it, and today, we rejected off of it. If the 10-year yield was indeed going higher, to the 420 range, which was what I was suspecting because of the upper trend line on the top of this thing right here. You can see these lines here. If that was going to happen, we would need to see a fight at least at this level, and then, maybe break up higher to poke our head in that area. But we flushed straight back down, and so it's hard to say exactly where it'll go from here. Again, it typically follows crude oil more than anything else, and crude oil is not looking like it's going to go up. And there's no geopolitical events that look like they're going to make it go up. So again, TLT, my favorite place to be. It wasn't just the 10-year Treasury note yield that rose yesterday and fell back down today. The 2-year also did basically the same thing. And the 2-year is tied directly to the Fed funds futures, which pretty much tells the Fed what to do. They really tell each other what to do. So the 2-year is expecting, less hawkishness, more dovishness, just on the day-to-day. So to play devil's advocate on the rising volatility, the credit market doesn't seem as concerned. HYG, junk bond fund divided by government fund shy with similar duration. Basically flat. It's not flipping out at all. I would have thought, looking at the NASDAQ, looking at all these things falling, that credit markets would widen, maybe even significantly today, and we went sideways. So I'm not sure exactly what to make of that. We talked about Bitcoin yesterday being nothing more than looking like a bounce, and so far that does look like it's true. Today's candle's engulfing yesterday's candle to the downside. And remember, what does Bitcoin really represent? It's a place where people have extra money that they want to put it into something that they think they'll get more money from in the future. It's the ultimate greed indicator. It's the ultimate measure of wealth that wants to be wealthier. And when this gets scared, oftentimes the whole stock market follows it. And remember, we're about 21% down from the all-time highs, much further lower than where stocks are right now. And I've been talking about how stocks are likely to follow. It looks like that might be playing out now. And if Bitcoin continues to drag lower, it, in my opinion, will continue to drag it lower. We might have seen the peak in the stock market at this point. And I have said that before, and I've been wrong. So remember, this is just a show and for entertainment. I'm just a guy with a crystal ball, and none of this is any kind of advice. Alongside credit markets not doing much, copper is oftentimes a leading indicator of things just going sideways. Dr. Copper with a PhD in economics, not really convinced of anything. I think the Challenger report was sort of a splash of cold water on Mr. Market's face. And, copper's waiting patiently. I think copper wants to see all the data that we're missing, all the jobs reports from the government. Gold still going flat. I am going to add now, though, at this point, it looks like we're tightening up here, which means that we're preparing for a breakout. And my guess is we are headed lower, down to 3,500. I'll repeat, a lot of people are looking at this as a buying zone. It was the ultimate peak in April, and so it should be a place of support for the price. So there will most definitely be at least a bounce from this level. Some people think that we're headed higher. I don't. I think we're going lower just because of the overvaluation of gold. I talk about this on the channel a lot. But I'm going to bring it up again just because we got a little bit of an update on gold to oil ratio, crude oil. We should turn off the log scale for dramatic effect. How much crude oil should you get for 1 ounce of gold? This literally measures how many barrels of crude oil you can buy with 1 ounce of gold. I love this indicator because it shows a direct comparison between the real economy, which uses oil. That's something real. That's economic. That's economy. Gold is financial asset, purely financial asset, right? Nobody needs gold for anything at all. And so right now, as of November, we hit it's a record peak of 66.76 barrels of oil for 1 ounce of gold. The only time we were higher than that was when crude oil was literally negative. It went negative, something like $32 a barrel. People would pay you to take it because of the COVID shock. Besides that time, this chart, I didn't even have it scrolled out all the way. Now this chart, it goes back all the way to the 1940s, 1946. All right. The highest it had ever gotten was, 33 barrels, 1986, 1973, 2016, 33. It had never gone above 33 before outside of the time it went negative during COVID. And now we're just sitting here at 66 like this is normal. So either crude oil is destined to go up in price, or maybe the price of gold has gotten a little ahead of itself. Last thing, Nissan earnings were released today. I haven't had time to comb through the balance sheet yet. I know the company rose cash by selling its headquarters and now leasing it out with a non-disclosed contract of what they're going to be paying. That alone, I think, is powerful. because, you know, the company buying the building is relying on the company to be able to lease the building from them. So we almost have an injection of capital that's sort of acting like a light liability to help make the balance sheet more that much more solid. My first glance on it is I believe it looks way more solid than it did before. I do plan on doing a update on that when I have time to dig into it deeper. But that's all I have for today's show. I hope you enjoyed. Thank you for watching and see you next time. Robschild.